Hey guys, welcome back to the channel. This is Shuriel and you're watching Morris Millennial, where we talk about all things money that they don't teach you in school. And since it's October, it's the beginning of a new month, so we are going to be talking about my investing strategy for the month of October and how I'm planning on using the stock market to its full advantage to make money for myself and my family and hopefully achieve financial independence as soon as possible. So yeah, so talking about September has been a wild month for the stock market. Traditionally, September always is a wild month. Traditionally, stock market typically ends up negative for the month of September. We have seen last month that the historical data shows that stock market usually loses about 0.5% on an average for the month of September. This year, though, for 2021, the stock market lost about 4.5% just for the month of September, just because of all the volatility that's been going on um, in the market, and just because of all the negative press that surrounds the stock market, and just because of that, people have been selling stocks and trying to get out of their positions and maintain cash or invest in other assets. I don't know what they're doing with their cash, but that's what's been going on. One of the major things that happened for the month of September during like mid-September or so, um, the Evergrande crisis came on to surface out of China, and I think that was one of the major events that kind of decided the course of the market for the month of September. The other thing that happened was during the Fed meeting towards the later half of the month, the Feds discussed how the economy is improving faster than they originally anticipated, and because of that, they would start bond purchase tapering towards the end of this year, which will last into say mid 2022. And then after mid 2022, there is chances that interest rates will start slowly going up. So because of that, bond yields automatically started going up, since like mid to late September. And typically, when bond yields start going up, the stock market kind of gets scared and reacts to it and starts selling off. What that means is that once the bond yields start going up, there's potential for interest rates to go up, and because of that, future profits have a potential to decline, and all of the tech companies, all of Apple, Google, Microsoft, Tesla, all of the new EVs, the price of their stock is priced on future potential for returns. So if the interest rates go up, it means that these tech companies will take more money or will require more money for maintaining their operations, and because of that, their profitability will decrease. And owing to that, just the long-term potential for tech stocks is considered a little bit diminished than when interest rates are slightly lower, and because of that, we saw a sell-off in the tech world towards the end of last month, and it's still going on. I mean, for the month of October too, and we'll discuss that in a minute here. Well, what we have seen is that the market has been choppy. October also traditionally is not great for the market. Um, it's just been choppy overall and not been doing great. And here we are, 6 days in October, and we'll see. We'll see. I mean, we'll try to make sure that we can use the current momentum in the market, whichever way it is, negative, positive, for our benefit, for making money for us, and we'll see what's the best we can do out of it, right? So that being said, I'm not a financial advisor, so definitely do your own research. But I'll try and make sure that whatever I point out here is um, giving you some meat to think about, definitely, and see what you can do out of this information, right? Um, so going back in the year, I think September marked the end of Q3, third financial quarter for 2021, and it was a major event because relatively major event because all of the companies that are listed on the stock market, they provide their earnings reports at the end of each quarter, and there's 4 quarters in a year. So Q1, Q2, after Q1, Q2, they provided or showed their earnings reports. How much they've been making, what they have been spending, where they have been spending the money, if there is investments in crypto currency or not, or what they've been making with their investments on cryptocurrencies and things of that nature. So September marked the end of Q3. So July, August, September were the 3 months that we will soon start seeing, financial data for, earnings data for. So I'm looking forward to that. I'm looking forward to seeing how some of the stocks that I already currently own have performed for the third quarter, and what kind of returns I'm getting from my investments for those. I guess another major thing that's being discussed in the market right now, and that's being reacted to in the market right now, is the U.S. debt ceiling. So there's been debate going on in Congress about raising or not raising U.S. debt limits, and if U.S. debt limits are not raised by, I believe it's October 18th, if the rates are not raised by that date, then the US is at the risk of, or the government is at the risk of, running out of money, and that may cause a government shutdown, and for the government to stop paying for, some of its dues. And if that happens, that's typically a major phenomenon in the market. That's what's called a scary event for the market, and the market may react to that. So typically over the past couple of weeks, whenever there has been news coming out of either positive or negative about the debt ceiling, market has reacted um, in some or the other fashion, and just everything combined, just the Evergrande crisis, followed by Jerome Powell coming out and talking about interest rates, and how the economy is doing, and unemployment and inflation, and all of these things are just combined with the debt ceiling issue that's been going on in the Congress right now. It's just keeping the market choppy for the time being, and so it's it has gotten a little bit more unpredictable as it's getting towards the end of 2021. What the market's going to do. Since the beginning of 2021, I think the market's done great. I was looking at my returns from all the investments I've made since the beginning of the year, and they were doing phenomenal until the beginning of September. But right after that, as soon as September hit, everything just um, you know uh, decided not to perform as well anymore. Um, so yeah, here we are. We are still positive for 2021, which is good. But the outlook or the forecast for October, November, December sort of looks choppy, just because of everything that's been going on. And I think one of the major factors that's causing everything, I think inflation has a lot to do with it. Energy prices are pretty much what have been driving the major portion of inflation over the past year. Um, and we have seen that the gas prices, prices for gas for your vehicles that you drive here and there, they are up like $1 from where they were around this time last year. So they're up significantly. Wages have been going up as well. It's not like just the prices of products are going up. So there's a lot going on, combined with like supply chain issues, chip shortages, port delays, everything shutting down. Automotive plant shutting down for a major portion. Um, yeah, it's a lot to digest overall, and that's what's been causing uncertainty in the market over the past few weeks. So let's take a look at what I am doing. I want to just use a little bit of time to talk about my investment strategy for the month of October, or for long term in general. Yeah, so let's start by taking a look at what I've been doing for the month of October, or what my plan is for the remainder of the month of October. And that typically will translate into entirety of Q4. It's not like I'm just investing just for the month of October, but basically here's where I am laying the foundation for my investment strategy for pretty much long term, for pretty much the rest of my life. Um, so I want you to just kind of see what I'm doing, and I kind of have this notes screen pulled up here, so you can take a look at that, and we'll just kind of take notes about what I'm doing for this month, and hopefully you'll be able to refer back to this, and or we'll be able to refer back to this together and see how my investments have performed, and what kind of returns I'm getting. So first of all, I want to start off with my employer-sponsored 401k account. Of course, I talked about this last month too, in the beginning of September, for my 401k. Um, no major changes. September was a good month. September, I had 3 paychecks just because of the number of weeks that were in the month of September. But October is different. October has less number of weeks, so I'm getting 2 paychecks. But that means that there will be two incidents when money will be transferred from my paycheck automatically to my 401k account, followed by the employer match. So we'll just write down their contribution as well as match. So that's what's going into the 401k for the month of October. Um, I keep my 401k investments pretty simple. So for the past few years, my 401k has been completely invested in the S&P 500 tracking Vanguard Index Fund, VFIX. So that basically that fund over there. And it just stays that way. So it automatically keeps dumping every couple of weeks, and I don't have to really touch it or do anything. So I'm for my contribution, I'm pretty much diverting my 401k contributions into my traditional 401k and also my Roth 401k. So a certain percentage I'm putting in the traditional 401k, which I won't be able to touch until I'm 59 and a half years of age. And then the remaining percentage I'm putting into the Roth 401k, which has a locking of 5 years, I believe. And then once the 5 years is done, you can take your money. It's all yours to keep. So I'm pretty much reaching that point of 5 years. Not to say I want to use my money, but in case of emergencies, if I ever need that money, if I ever need access to those funds to say buy a house or do something else, I have that money handy. So that's something to consider. After the 401k, I have the HSA account, which is a health savings account. So again, this is sort of like a employer sponsored, where I contribute some money um, to the HSA every single paycheck, and then that is followed with the employer match. Um, so yeah, so that happens every paycheck. Similar to the 401k, my HSA is also invested in a S&P 500 tracking index fund. So all of that money just constantly gets dumped, keeps growing. It just keeps dollar cost averaging, and I don't have to do a thing or look at it until I have to use that money at some point. And again, the good thing about HSA is that since all of this money is for qualified medical expenses, whenever there are medical expenses, I can use that money tax free to pay for those sort of expenses. So it sometimes comes in handy, whenever I need that money or access to that money. So that's a good thing to have. This is followed by our Fidelity brokerage account. So my wife and I, we have a joint Fidelity brokerage account, wherein any sort of additional money that we have to put in the market, put in stocks or whatever, we put all of that money in the Fidelity brokerage account. And this is sort of like a long term account. So there's no plans to have access to those funds or touch that money until later on in life, until after we have retired from our jobs and need income from our investments. So again, there's a fund called FXAIX, which is a S&P 500 tracking index fund. So most of our money, I think about 70% of Fidelity is allocated to FXAIX. Then there is FNCMX, which is a NASDAQ tracking index fund. So this is heavily just involved in tech stocks. So that's roughly about 5%, followed by, oh, sorry about that. Square, which is a fintech company. So I'm a firm believer in the business model of Square. Square is used for credit card and debit card transactions at small businesses, and they are also getting into cryptocurrency and decentralized finance, DeFi, and all of those things. So I feel like Square has a pretty good long-term potential. So about 3% of Fidelity is in Square, and then remaining stuff is just cash holdings in the brokerage account for buying when there's a dip. So how much would that be? What, 22% roughly? So that's just cash holdings. Over the past month, we definitely did deplete some of our cash holdings because the market has been so erratic that whenever there was a buying opportunity that presented itself, we pretty much just bought in, a few $100 or a couple of grand at a time, and uh, it's been, that's just how we will play the market. Every time there's an opportunity to buy the dip, we buy the dip, and just let it sit and let it do its thing long term. So that's what the third account. Followed by, we have my Robinhood account. So that's another brokerage. So just write that. This is my play account. So whatever money I put in my Robinhood account, and I do plan on sharing my Robinhood account with you guys at some point. So definitely do let me know in the comments below if you are interested in learning about what I'm investing in my Robinhood account and how my Robinhood account is performing compared to the S&P 500. And I would be more than happy to share that with you guys here. So Robinhood is play account. Whatever money I have, spare after contributing to the 401k, the HSA, and the Fidelity brokerage, because remember, those are long-term accounts. Those are supposed to be my or our retirement accounts, and I'm not gonna play with those accounts. But if I have any money left over for for the month or for those weeks that I get paid in, I typically contribute some of that money towards my Robinhood brokerage account. And right now, I'm planning on going pretty heavy on Tesla in my Robinhood brokerage. There's definitely other stocks that I'm invested in, but along with the other stocks, I'm also invested in Dogecoin quite a bit. Definitely not making money on Dogecoin at the moment, but it's not too much money. So if it so happens that Dogecoin ever blows up, goes to the moon, as they say, I'll make some amount of money. If it goes down to zero, it's whatever. It's not going to cause me any pain to say. So yeah, Robinhood is where typically I'll make couple trades a week, either buying something new or just selling something out and putting that money into something else, or just putting money from my bank account to the Robinhood account and just trying to play the market and trying to get more more returns from the market than what my Fidelity or my 401k account would provide for. So that's another thing that I'm invested in. Um, this is followed by Blockfi. So Blockfi, I'm paying more attention to these days than I'm paying attention to the Robinhood account. So my Blockfi has probably 92% in Bitcoin, and then the remainder is in Ethereum. And I do plan on buying more Ethereum as the prices permit. Right now, we just saw today that Bitcoin and Ethereum and most cryptocurrencies had a massive rally. So I think Bitcoin is sitting at what, about 55,000 at the time of making this video, and Ethereum was right around $3,600. So obviously, all of the money that I have been dollar cost averaging into Bitcoin and Ethereum over the past few months, right now it's all up and making money and also earning me interest at the same time, because my Bitcoin here earns I think it's like 4% interest, and then Ethereum is like 4.5% interest. So that those investments in cryptocurrencies are definitely one, going up in value, and two, earning me interest every single month, or every single day actually. So those are decent investments to have. let's see here. What else? What else do we have? Yeah, I did open a public account earlier this month. This was mostly because of one of Graham Stephan's video that I saw, and it was offering anywhere up to $70 in stock. So I opened that account. I got $23 in Tesla stock from it. I deposited about $100 in it. So probably have what $123 worth of Tesla right now in the stock. So definitely not not a lot, but not bad either. So I'll just let that account sit, and over time try and build my Tesla position between either just public and Robinhood, or just Robinhood, depending on what my mood is like. So I did want to talk about Tesla just a bit. So what's going on with Tesla, why I'm so you know why I'm so bullish on Tesla right now, because Tesla definitely has grown a lot in terms of stock value over the past year and a half at this point. And earlier this year, or actually late last year, they were added to the S&P 500, and then they also went through a stock split, so that more people can invest in that stock, so more people can afford that stock. And currently, it's sitting right around, I think it was like $780. But I've been taking a look at what Tesla has been delivering for the past few months, and every single quarter the amount of deliveries they make, or amount of vehicles they produce, keeps going up and up and up. So I think earlier this month, Tesla announced the number of vehicles they produced for Q3. So I think Q3 they made right around 241,000 vehicles, and then Q3 estimates were 232,000, right around 232,000 vehicles. So they definitely beat analyst estimates for how many vehicles they were producing, and that's definitely a good thing, a great thing actually, given that every other OEM on the market has been shutting down at least one of their plants, just given supply chain issues and semiconductor chip shortages, and things of that nature. So people have been, or OEMs haven't been able to keep up with the demand in the market, first of all, and also their production schedule, or their production volume that they had anticipated in the beginning of the year. But Tesla obviously is doing something differently, so they're able to keep up with the crisis, and sort of beat it, where they can still produce more vehicles. And then going beyond this, this may come out to roughly, what, for 2021, Tesla will make roughly 1 million vehicles, right? But Tesla has a aggressive target of making 20 million vehicles within the next decade, every year. So by 2031, Tesla is looking to start producing 20 million vehicles every single year. So all of that is going to sort of like, here's what, 2021, 2031. So this is gonna ramp up significantly. So I think just because of that, I think yeah, and then once that happens, just because of the sheer volume, all of their operational costs are expected to go down as well, just because they're buying so much in such high quantities, compared to what they're buying now. And then not just that, I think the way they are making money, right? I mean, there's subscription services, there's insurance services. They are expected to be charging on a monthly or an annual basis for their autonomous or self-driving feature, which already they rolled out the beta version of that last month. So owing to that, just the way the business model is set up, beyond just selling the car, there is ways for generating revenue on a month-to-month basis. So I think that makes me extremely bullish on Tesla. and the bet basically is entirely on Elon Musk. And Tesla, in terms of the technology they are way ahead of any other EV company out there, because all the other EV companies are just getting started with their footing. And then Tesla, of course, has been delivering vehicles for the past several years at this point, and they already have Model S, Model X, Model 3, Model Y, that they are delivering, making and delivering, and then the Cybertruck that's coming out next year. I don't know how I feel about the Cybertruck just yet. I feel like the Rivian R1T is much more practical and how should I say, more mass market than the Cybertruck is. But the Cybertruck definitely is ways out there. Meaning it's completely different than what we have ever seen in the market. Um, so yeah, so that's what I've been what I've been doing, what I'm planning to do for the month of October, for what I'm planning to do for the rest of the year actually. And I'll definitely keep updating on what changes with my investment plan and investment strategies, and why certain things change. And I look forward to look back on this particular these particular notes that I took today, and try and see if that was good or not in the long term. So I do appreciate you tuning in to this video today, and sparing some time to just listen to what I have to say about the stock market and where I think the stock market is headed. I do feel like the stock market is going to be choppy for the remainder of the year, specifically at least for the months of October and November. And then in December, as people go on vacations and Christmas holidays, the market might see some respite from the choppiness that it has been facing. But that being said, definitely, like I said earlier, do your own research. Read your own articles, talk to your own financial advisor before you make any sort of decisions. And please go ahead and like this video below and subscribe to my channel for more similar content. And if you like this sort of a video that talks about my investment strategy, do drop a comment down below about what you like about this video and what else you would like to hear and understand better. And I look forward to seeing you again in my next video. All right. Thanks so much for watching.